Good morning, everybody. This is the Equity Management Academy Live Trading Room special weekend report for the Gold and Silver Weekly Futures Swing Trading Instructions for September 26, 2014. On this segment, we're going to try it a little different in terms of reviewing the weekly reports that we publish every Saturday. And on this report that was published on the 19th, I want to review basically the signals that were produced last Saturday and what happened basically during the week. If we take a look at the gold market, basically the report published last week was anticipating that the bearish, that the sentiment was bearish, the market closing down below the indicator of 1225 was bearish, and that if it closes above 1225, it's going to negate that bearish signal to neutral. And it also told you that if it comes down and you short, to cover corrections, to cover your shorts at the 1206 to 1196 levels, and to go long with an 1196 stop close only. And if you go long, basically to take out profits at 1235 to 1253 levels during this coming week. If we take a look at the chart in the gold market, the low was basically 1206.60 made on 925.14, and it came right down into this buy-in level of support that was recommended last week. The signal is long, and it's basically recommending that the first target was 1235, which we hit on Tuesday. We came down on Monday to a low of about 1208.80, and we got up to 1835 on Tuesday with a high of basically 1237. And from there, we came back down here on Thursday, made a low in that 1206 area recommended in the report, and we closed at 1220 for the December contract. The signal is now, if we take a look at this week's report that we just published a few minutes ago, the targets that we're looking at is 1236 to 1251 on the signal. That should be expected sometime next week. The market can rally up to about 1251 in that vicinity, with resistance starting at about 1248. So if you are swing trading the gold market, your position basically will be reinforced by an opening above 1221 on Sunday night, or on Monday if you're trading only the US day session, with a target of 1238 to 1251. The levels of support or recommending the levels where to buy is 1206 all the way down to 1191. 1191 is the second level of buying recommendation that is indicating to us that the market could be, if we do approach these levels, very much extremely oversold. Once again, you see quite a bit of support here into this area, and the market basically testing these levels of support. There seems to be some physical interest underneath the market in this area between 1206 and 1191 is the highest probability area to buy an oversold condition in the market. So we're going to keep an eye on coming into next week. The indications are basically, as we see here, that the market is establishing some kind of support. Let's go into the silver market and take a look at what the chart last week was indicating, basically. And we look at silver. Basically, was recommending to cover the shorts as we were coming in to the week with a bearish momentum below the VC price momentum indicator of 1816, which was the pivot point or metric, so to speak, for the weekly trend. But I told you if you were short to cover short on corrections into the 1742 to 1706 level. And we made a low on the 25th of 1727. And so it came right into this level of support and buying cluster of support and buying recommendations on the long side with a 1706 stop. The market closed at 1765, so if you bought it at 1742, you have a 23-cent profit built into the position with your stop at 1706, or you can raise your stop to break even at 1742 once you start to initiate a profit. Let's take a look at the report, basically, that we just published once again and what it is recommending for next week on the silver market. The report, the algorithm is recommending basically that the 1728 to 1691 is going to be a major buying area, and it's recommending to cover your short positions. With the market closing above the indicator of 1763, the VC indicator, which is the weekly pivot point or metrics, it confirms that the price momentum has turned bullish. A close below 1763 would negate this signal and would turn it neutral once again, recommending that if we come down to the 1728 to 1691 levels, to go long and put your stop at 1691. Your targets for next week are 18 to 1836. The first level that is recommending to take profits is at 18. Second level is 1836. So the beauty about this indicator and algorithm is that it's able to identify for us the highest probability levels of support, which is in the 1728 to 1691 area, as you can see here, going back to some major long-term trend lines in support, and some retracements that indicate that we could rally all the way up to about 1880 before we start to see some resistance once again, major resistance. In the meantime, the market seems to be looking for support down here, and as we move into next week, let's see if we can challenge the targets of 18 to 1836 for the silver, December silver contract. We will post and publish this information on a weekly basis. This is Patrick MontesDeOca with a live trading room special update for the gold and silver market, sponsored by the Equity Management Academy.